Hi, everyone. Welcome to the March 2022 update on the private markets and economic outlook from ACEC. I'm Erin McLaughlin, a vice president with ACEC, and if you like our content, I encourage you to subscribe to this YouTube channel so you can see all of our monthly updates. So, as we usually do, we're going to go ahead and start with our monthly construction put in place numbers, and the latest numbers are for January 2022. We're seeing the continuation of some existing trends which we saw all last year. So we're seeing that total design and construction is up just over 8%, with the strongest market being residential at just over 13%. Private non-residential continues to be very strong, rebounding from our pandemic recession at just over 7%, while public design and construction spending remains flat. As you can see on this slide, this continues our annual trend that we saw last year over 2020. So residential was by far the strongest market at over 23% growth last year in 2021 compared to 2020. And we saw private get stronger as we went throughout the year, while public declined a little bit but seems to be coming back, and we imagine will be very strong this year as we see the initiation of spending from the infrastructure bill, which was signed into law this past November. Now, as many of you who have seen my previous presentations know, I like to show this pie chart slide so that we can be reminded that we design and construct all aspects of the built environment. Obviously, we talk about transportation a lot, and of course, I talk about private markets a lot, but it's really every aspect of the built environment. Transportation was 19% of design and construction spending in 2021, and this is all non-residential sectors. But it was followed by education at 12%, power at 14%, commercial, which includes retail, at 11%. So there is definitely a lot of spending that happens in varied markets. Now, of course, we care about all design and construction spending, but one metric that we pay particular close eye on is AE revenues. So it's really interesting to see, and we got the Q4 numbers from last year, 2021, out just a couple weeks ago, that we have steadily increased from our little pandemic dip in the second quarter of 2020. So, in our last recession, the Great Recession, it took years for us to see growth, but we have actually seen 6 quarters of growth. And we were at a peak right before the recession in the fourth quarter of 2019. And now we have reached a new peak, and for the first time ever have crossed a quarterly number of 100 billion. So we are just at about 101 billion in AE revenues estimated for the fourth quarter of last year. So looking at our economic situation now, what was so interesting, obviously, about 2020 was that the upheaval was caused by a pandemic. And just as we're coming out of it and growing, we are experiencing more upheaval related to geopolitics, how we control inflation, and other aspects. So one metric that we look closely at is the National Association for Business Economics, NABE's quarterly outlook survey. So we can see in their outlook that just came out last week that they see, the panel of macroeconomic experts, that inflation will remain higher than previously expected over the next 3 years, generally coming from the labor market. And 30%, in addition to labor being a big issue, identified monetary policy missteps as our greatest downside risk. So what that essentially means is how the Fed decides to increase interest rates, the pace and the actual increases will have a significant impact on how we sort of curb this inflation, curb our labor market, and get back to more measured growth. And 77% of panelists suggested a wage price spiral, say that 10 times fast, is either already occurring or will be a major risk in 2022. So you might be wondering, what is a wage price spiral? Well, it is basically the phenomenon of price increases that come as a result of higher wages, and that essentially when wages go up, the demand for goods and services increases. We were already seeing that demand increase as a result of the pandemic, and that in turn causes prices to rise. So it's a spiral up, not a spiral down. And it is a bit of a self-fulfilling loop. Now, how we control that loop is by obviously adjusting monetary policy to create a more balanced demand. Now, the unemployment rate does reflect that it is getting very, very low. So it was well below 4% as we went into the pandemic. And as this slide shows, it dipped below 4% again late this fall and remains there. And it's right at 3.8% for all employment. However, for our sector, which is professional business services, we remain at 2.2%, which is just incredibly low. So the competition for our labor pool is really high, and therefore wages truly are going up. Now, in the NABE Outlook survey, they noted that 19% of the analysts said that geopolitical tensions would be the greatest downside risk. This is the first time that this factor has weighted so heavily on this survey, and this survey was actually conducted before we saw Russia attack Ukraine. Now, 30%, the leading downside risk noted, was again monetary policy missteps, which basically is controlling employment and inflation through interest rate adjustments. So this is all happening at the same time last week that Fed Chair Jerome Powell did his semi-annual testimony before Congress. He testified on Wednesday and Thursday of last week, and he noted that he is very aware of the extraordinary uncertainty that the world is now facing as we just come out of being extraordinarily uncertain due to the pandemic, and that he is proposing a 0.25 percentage point interest rate increase at the Fed meetings later this month. So this is, the business analyst and the business community was thinking it might be 0.5 point. This is a little bit less than initially thought. And I think that, given everything else that's happened, that will hopefully provide a little bit more certainty to our markets as we move forward. Now, if you find this interesting and you want to know what happens next, because we're in a really changing environment, I encourage you to check out all of our monthly presentations as well as our private industry briefs, which go into detail about the markets. And of course, we are holding our private market symposiums, which is where we get together in person to talk about the changing markets. And we will be in Cambridge, Massachusetts, in Kendall Square at the end of April, talking about the healthcare and science and technology market. So hopefully you can join us for that. And with that, I thank you all, and I'll see you next month.